For those of you who I did not get a chance to meet, hi, my name is Brandy Sams. I am a national residential multifamily and commercial lender. I'm going to have this conversation as if I was talking to my mom, my sister, my cousin, my auntie. That's the way I talk to people in general. Okay, so this is a question that I get often, and I know that my thoughts are unconventional. But if you follow me on any of my social platforms at Beyond the Close, you know that my motto is learn the game, know the rules so that you can own your own results. So when it comes to interviewing a lender, I don't want you to think like a typical consumer. I want you to be armed with the information so that you know who you're talking to. The majority of lenders are salespeople. They are not educators, right? Their thought is, I have the money, you need the money, right? So knowing that equips you with how to handle a lender when you are interviewing them. Now, I'm sharing secrets, so don't use this on me. Use it on them, right? So here, with that in mind, here's what you're going to look at. You're going to look at what kind of lender are you dealing with? Are you dealing with a bank, a mortgage banker, or a broker? Most banks are not in the business of mortgage. They're in the business of deposits. So mortgage is what they do as a additional service, but it's not really how they're set up. Oftentimes you don't even get a chance to talk to someone who's the same person the whole time. So you do have to recognize that the interview process would look a little bit different because you're really not going to find that personal connection. Now, mortgage bankers and brokers, that's all we do all day long. And so you have a better chance with getting the information that you need from that person that's in that side than you would a bank. So like a Wells Fargo or something like that versus a mom and pop broker shop or a regional broker shop. It's going to be more personal. The next thing you're going to look at is what stage in the process are you? Are you in the early stages of pre-approval or are you about to get a contract or under contract? Because what you're looking for at that time is going to be totally different. My number one tip is to not be aggressive when you're going through this process. There's something, I don't know if your mother or grandmother told you, but you can get more flies with honey than you can vinegar. Make sure that you are considering what part of the country you're in as well, because the way you handle things in California isn't the same as New York, isn't the same as Kansas City, isn't the same as Texas. You have to know your environment. However, if you're at the pre-approval stage, I have 5 things that you should be looking for when you are interviewing or in the process of interviewing different lenders. So at pre-approval, a lot of the information is hypothetical, right? You don't have a property. You just have numbers in your head that you think you're going to be able to find. So you're really looking for a lender who you can match personality with, who's going to be available according to the way you'd like to work, or at least has someone on their team that could be available. You're going to look at service. Service is going to be really big in terms of your ability to communicate and their ability to communicate with you, maybe some tools that they have available, because everyone's going to pretty much have the same program, right? You're also going to look at knowledge. Remember, I told you that most lenders are salespeople. They're not educators. So can that person help you make a strategic decision when it comes to your financing of a property? Last but not least is honesty. You don't always want to have the person who tells you what you want to hear. You have the person who tells you what you want to work with the person who tells you what you need to hear, right? And sometimes it's not, oh, well, the rate's going to be 3.2. Sometimes they're going to have to say, hey, with your credit score, with your situation, with your work history, you're going to be a little bit more above average. Now, a salesperson is going to try to give you everything to keep you in a hype position, and they're not necessarily going to educate you on what things look like for you. Have you ever gone to a car dealership and wondered why they ask you what you want your monthly payment to be? Well, it's because they don't want you to pay attention to anything else. They don't want you to pay attention to the cost of the car. Is this actually reasonable for the cost of the car? They don't want you to pay attention to the interest rate. Okay, is it higher or lower than average? They don't want you to pay attention to the other junk fees, right? They just want you to pay attention only to that. Well, the same thing exists on the mortgage side. Okay, so now at contract, I want you to take all five of those things and I want you to add in three more things. That's when you want to talk to someone about how often or how many times they've actually successfully closed your loan type. That's when you want to actually talk about rates, because now you have an actual property that has some validity and we can actually talk about specifics, not just hypotheticals, right? Then you also want to make sure that at that point in time that you're comparing your situation with the right loan type. Sometimes we compare rates with one another, especially in this group, but we aren't taking in consideration like the main things that make up an actual offering. And it's not just FHA. It's 3.5% to 5%. Also be, and we're talking about a $200,000 property or a $500,000 property. Are we talking about a single family versus a duplex? Like that's when you get more into making sure that the estimates you have are apples to apples with all the lenders. But you have the best time to do that when you're putting in offers and or already under contract. Okay. Now the other part that we're going to go that goes hand in hand with this interview process is all around this idea about how can we negotiate our fees. Matt made a good point. There are certain aspects of this that is super tricky. So I don't want you to focus on all of it. What I want you to focus on are the things that can possibly be controlled by a loan officer, because we don't control most of the estimate and you'll get bait and switch when it comes to the third party fees. So I want you to avoid that. The number one tip that I have for you when it comes to negotiating the fees is similar to what I tell my investment clients when they're looking for good contractors. I generally tell them, make sure to have a time and have all the three contractors come at the same time so that you can go through the process together. Now, I'm not suggesting that you should have all three lenders on the phone, but what I am suggesting is that you don't just talk to lenders. You actually ask for written estimates based on your property and the details that you know are consistent. And then you show each of them the other two, right? Sometimes I have found, especially in this group, people say, oh, well, so-and-so said I can get this. They said I can get that. Well, I can't do anything with that. I can't take that to management. I can't get an exception for you. But if you show me something in writing from the other company, you're more likely to be able to negotiate. I really hope that these or this further explanation helps you to understand the mind of a lender so that you can be in the best position. Ultimately, everyone who graced that stage did so because they are invested in you and they're invested in your ability to make real estate a long-term achievement. For everyone who is on stage, congratulations. For everyone who hasn't gotten there yet, don't lose heart. I tell you guys about being a sixth generation landowner, not because it's like, ooh, look at me. I tell you that because each of you have the right and the ability to make the decision today for those tomorrow. Someone asked, when was the best time to plant a tree? There are two answers. One was 20 years ago and one is now. If you didn't have someone do that for you 20 years ago in terms of investing in real estate, that's okay. You can do it now for those behind you. My final thought is this. God impregnated us all with gifts and talents and goals and vision and dreams, right? And it's up to us to nurture that the same way a mother would nurture their baby through the gestation period. And that time frame is going to come with silence. That time frame is going to involve continual investment in feeding into yourself, into your knowledge, making sure you're doing your budgeting and all the things that are helping you feed that goal of owning additional real estate, whether or not it's your first or you're scaling up to your 100th, right? But don't be afraid of the labor pains. It's going to be difficult at times, but focus on the fact that what's on the other side of that is something to celebrate, something to be proud of,